nearly 50% so far just this year. The stock market, crypto, and the Moon Boys continue to erupt from their trousers more than a Taco Bell employee on free taco night. As the true eye of the storm, breakout before the bust out, switcheroo, giga reach around begins now. Will Bitcoin crash or explode? And with the most turbulent, insane FOMC meeting of the last year just moments away, we are guaranteed to have our socks knocked off, our juice let loose, and our bellies full of gainers or big dumpers. The biggest week of Bitcoin's history starts right now. And over the past week, I've been recovering from multiple jellyfish stings. But over the next week, my body should be recovering, and just in time, because Bitcoin's price right now is truly at one of the most critical stages, and we've seen what has happened just over the last few days. And if we go back, the last time I made a video about 4 or 5 days ago, before I was ambushed by a group of jellyfish and completely brought to my knees, what I said was most likely for those last few videos is that I personally think that we will see some sort of retracement before any further upside, but I do believe that this relief rally has some legs still. And guys, this is where it gets really exciting here. So first off, we have the FOMC meeting in just days. We're going to be having it in the middle of this week. And as we know with FOMC meetings, they are huge drivers of price. And as you can see on this chart here, we're about to get another FOMC meeting. And pretty much, if you look on these charts, right next to these lines are the biggest moves of the last year. Whether it's a couple days before or a couple days after, usually a couple days after, big moves have happened very frequently on this chart after these FOMC meetings, and I expect that the same thing will be happening for this next upcoming meeting. But I do want to highlight a few things here, and that's that we actually filled immediately today a CME gap, and many of you are aware as well, there is one right between like the $19,900 to $20.5 thousand level for Bitcoin. There is a little bit of a CME gap down here. Absolutely, that does not mean it has to fill, but it is something that we worth noting, especially after so quickly already we have filled a CME gap. In fact, very often these CME gaps have not filled. I've heard this narrative for years about CME gaps and having to fill, and there are still significant CME gaps far below where we've even gone in this bear market that have not filled. That doesn't mean they have to fill. And it's been like a hotly, or it used to be more hotly debated, but at this point, I think CME gaps are a little less relevant. But it is worth noting that regardless of the CME gap, I personally think that we could clearly, and I've been saying this for the past few videos, it would still be absolutely normal if we saw a move back to 20,000 or even below 20,000 over the next week. Or before we continued some upside here. So that's not unusual. That's totally normal also. Absolutely worth noting. And also, finally, we're seeing miner revenues jump actually over 50%. We were seeing miners get crushed throughout all of 2022. And finally, we've seen miner revenue skyrocket here, which is just healthier for the market. If miners are just getting destroyed and they have to sell to even, fund their businesses, that is obviously not good for Bitcoin's ecosystem, and it's not good for Bitcoin's price to go up. So that is another promising thing there. But also, the final thing noted here before we get into the charts is that the Fear and Greed Index, there's plenty of room to run if we have any similarities in the Fear and Greed Index to previous rallies also for Bitcoin. So again, as I've been saying, I personally think over the next few weeks and months, very likely Bitcoin could have some nice upside. However, I do think, and I've been saying this for over a week now, that I think it's very likely we could see that pullback first. And I think that especially is very important to note as we go into this FOMC meeting, which are these FOMC meetings are notoriously very volatile. You can benefit very highly by trading them if you already have like open positions with pretty far away like stop losses and stuff. But basically what I'm saying is if you like open a position of the day of the FOMC meetings, that's usually not the best thing to do. So what I'm trying to say there is that, if you wake up and you're like, okay, I'm going to trade the FOMC today, and you try to do a position that day, usually I think that's obviously a lot more risky and not the smartest thing to do. But if you have like longer term open positions with much more wide like stop losses and stuff, then again that's I feel like that's a more, in the past I've seen that definitely work out much better than like trying to day trade these FOMC meetings, because the FOMC meetings are notoriously volatile. But obviously, so the DXY, one of the very important things we're going to be watching over this next 24 hours is the DXY and how it holds at its level there. And also the S&P 500 right now is actually getting a little bit of a pullback, which also is bringing Bitcoin with it. Just like we saw the S&P rising over Friday, bring the crypto market with it, we're seeing the dump of the SPX bring Bitcoin and everything down as well. But really importantly here, if we take a look at Bitcoin on the weekly chart, we still have not gotten above the 200-week moving average, which is just very important for our long-term health. It's right around 25,000. We haven't broken above that yet. And until we break that, I personally think that the possibility of maybe even revisiting 20,000 is very real and worth noting. And just worth, putting into your game plan, whether it's like a trading game plan or what have you. I mean, but we also have to keep in mind this is the beginning potentially of a macro year plus long falling wedge, which is just, you cannot ignore that. That can be very powerful. Now, one more FOMC, one more CPI could be the trigger that busts this completely to the upside. One more like positive of each of those, or one of them. If we see the Fed pivot, again, it's going to be very interesting to see what the Fed says here, because most likely what they'll say is they'll remain very hawkish and they'll remain like we have to just be very tight with everything. Because we also have to keep in mind that even if things look really good and even if they start feeling better about tackling inflation and they think they're doing a good job, they're not going to telegraph that to us. They don't want us to think that really, because they don't want the stock market to run, because then it makes it more likely that it goes against their mission, because then it makes it more likely that they might have to tighten even more. So they want to have a very strong stance towards this, and that's really important, right? So it almost doesn't really matter what the data says at this point, as much as they're going to keep being very aggressive until they bring the economy as close to its knees as they can to try to prevent inflation. Because again, they've said so many times they would rather do that than have inflation become more permanent. So you guys make sure to like, subscribe, turn on those notifications, and which is absolutely time-sensitive alerts. I will be back with normal videos probably within the next day or two. Really just depends on how I'm feeling. But as well, if you guys are interested in any trading bonuses, deposit bonuses, 0 fees for spot trading, it takes 30 seconds to sign up, no KYC required with BITGET and BitGet below. Absolutely, if you're going to be trading, 0 fees are the way to go, especially with spot, and as well, the biggest bonuses for those platforms, also using my links below.